Shall I start with first? Good afternoon, everyone. On behalf of Women and Young Member Excellence Committee of ICI, it is my pleasure to welcome you all to Yashaswini, an Ideal Series 94. Yashaswini and Ideal is a Wednesday series of programs conducted by WYMEC for the Women CAs and by the Women CAs. This series is an extension of Sky High Symposium, which concluded its 100 episodes. It is one of the committee's initiatives to not only disseminate information to women members on technical updation and non-technical skills, but also to empower and inspire women members to come at forefront and release their verbal skill at public forum. So let's begin with our first session, GST for cooperative societies and clubs. Brief profile of Nidhi Khakar. CA Nidhi Khakar is a fellow CA specialized in GST, tax compliance, and advisory with over a decade of experience. She is a co-founder partner at a leading CA firm, an active speaker, and mentor on GST across professional platforms. Thank you. Over to you, ma'am. Nidhi, ma'am. Nidhi, ma'am.
Good afternoon, everyone. Thank you so
Good
much.
afternoon.
Thank you so much for the introduction and the opportunity to come here. I'll start my presentation. So the topic given to me is GST on cooperative society, housing societies and clubs. As we all are aware that this is much debated, however, a very interesting subject because it is very much different from a normal business transactions. I'll start with sharing my presentation over here. Is the screen visible?
Yes, yes.
Okay, thank you. So first of all, let me give a small disclaimer that all the views which are given in the presentation are my personal opinion, not binding on anyone, as well as I would definitely advise to all the participants here to themselves look into each provisions because each case which you come across are peculiar in nature and are different from each other. So whatever I'm guiding you here is definitely some important points. However, I would definitely advise you to yourself visit the provisions for better understanding. And all the illustrations, if any, or whatever are discussed here are also imaginary. So what do you mean by a cooperative housing society? It's basically a mutual association where a group of people are coming in together for a common purpose. For example, for a housing society, I'm taking particularly a housing society. So a housing society, we have a number of flats or even a individual residential units wherein they form a group, a society, and all the common expenses are managed, all the common activities are managed by such association. On the other hand, what do you mean by a club or an association? Now, a club is separate from a housing society wherein there is a residential units, but here they all come with a common interest, common activities they are intended to have. So a club may be a clubhouse, a club may be only an association of people who meet regularly, maybe for a social gatherings or for having any sports activities together. So here, a very important concept in both of the above is doctrine of mutuality. Now, what do you mean by this doctrine of mutuality? It means that members, the association or the cooperative societies are formed by the members, they work for the members and the activities are performed for the members. So they are no different from, however, they might be having a separate PAN, but they don't have any other intention or their reason of conducting those activities. They are not for profit. They don't work for profit. They work for a common purpose the interest of for the in the interest of the members. So it is said that they cannot be separated from each other, and that is the meaning of this doctrine of mutuality. So you cannot earn out of yourself, like whatever contribution each member makes in a housing society or in a club, they are all for the benefits of themselves only. And hence it is said that they are not separate from each other. Now, here the key question is that can the activities undertaken by a society or a club for its members be considered as a business, as separate two legal entities? So all these question was answered on that they cannot be separated. They are the same, and these principle was upheld in multiple cases. All these are High Court judgments. Calcutta Club, Sports Club of Gujarat, Ranchi Club. All these were held that the doctrine of mutualities exists between the members and the cooperative society or the clubs, and the activities cannot be regarded as a transaction between them, business transaction between them. However, still, how the GST is coming into picture and how it is taking over these activities to supply, let's have a look. So for GST, there are three essential parameters to determine the taxability of GST for any transaction. First of all, there should be a supply. The transaction should involve supply of goods or service or both. Second, it should be it should be conducted in the course of business. That is, there should be business in that transaction. Activities must be conducted in the course of furtherance of business operations. Consideration. Of course, when there is some supply, there should be something in return given to the supplier, which is termed usually as a consideration. Let's have a closer look in the definition of each of them. Now, Section 7, this is as per the latest amendment included in these sections. So, scope of supply. So, Section 7 defines the term supply, and very cleverly the amendment was done, and this double A clause was added in Section 7, subsection 1. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment, or other valuable consideration. And also, an explanation to this clause was added. For the purposes of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, or any judgment, decree, or court of any or order of any court, tribunal, or authority, the person and its members or constituents shall be deemed to be separate persons. So by virtue of this amendment, they also try to overrule the judgment, the orders which were determined by these high courts in these cases, that even if they have upheld the doctrine of mutuality, this section overrides those orders and considers individuals and the association as two separate persons. And hence, supply between these two persons, transaction between these two persons will be regarded as supply, and hence under the GST ambit, it is covered. Now, it should have a business as well. They included that the transaction between cooperative society clubs and its members is a supply. Now, it should also be in the course of business. So for that, they provided entry E, section to section 217. Business includes provision by a club, association, society, or any such body for a subscription or any other consideration of the facilities or benefits to its members. So they added the transaction between members and the clubs or association in the definition of business as well. So they covered supply. They also covered the transaction between clubs and members in the definition of business. Now comes consideration. In relation to what do you mean by consideration? In relation to the supply of goods or service or both, includes any payment made or to be made, whether in money or otherwise, in respect of, in response to, or for the inducement of supply of goods or service or both, whether by recipient or by any other person, shall not be included. Any subsidy given. So this consideration definition was very much suiting in this transaction, wherein for being the member of the society, you are paying some fees or some contribution. So the transaction between both of them got covered under supply, business as well as consideration. Now, whatever I was explaining, let me summarize them in the form of in the form of a journey. Like when the GST was introduced in 2017, there was Section 7, subsection D, subsection 1, clause D, that the activities are treated as supply of goods or services as referred to in Schedule 2. So initially, Section 7 was not having that double A clause. Instead, it was having this clause D, which stated that all the activities covered in this schedule are to be treated as supply. However, coming to 2019, that entry was omitted. And after in 2022, till 2022, there was no such amendment to tax those transactions. However, in 2022, they added this clause double A, where the activities between the members and the cooperative societies got covered in the definition of supply. And also they tried to overrule the judge orders passed by different courts, that this clause will override all those judgments and that activities will get covered in the definition of supply. Thereafter came in 2020-25 the Indian Medical Association Kerala High Court judgment, which is the Indian Medical Association that again have a that is again have challenged the concept of doctrine of mutuality, and the High Court upheld the doctrine of mutuality still exists, even if all the overriding provisions which the government has included in Section 7 schedule entry, wherever they have included, but still you cannot separate the cooperative societies or the clubs from its members merely by adding a deeming fiction. So what was the outcome of the Kerala High Court judgment? That a supply or service, for us any supply or service, the constitution requires two persons. There should be one receiving it, there should be another supplying those things. Now when I have contributed for any services which are to be provided to me only, so when you enter a club, you pay a membership fees. Now that money is used to provide services to you only. So in that, you cannot say that the two persons are different. Here the supplier and the recipient are different. The supplier and the recipient are one and the same. And that is what the doctrine of mutuality is all about. The Kerala High Court state that it was still that the doctrine of mutuality still exists between the cooperative society and the members of the cooperative society, or even in the case of clubs and its members, because the clubs as such or cooperative as such do not work for any profit. They work for the betterment and in common interest of the members themselves, and the contribution is also received from the members themselves. And also that amendment of clause double A here, which we just read out, was done having a retrospective effect. That was done with effect from 1st July 2027, since the inception of GST. Now taxing these services between association and members retrospectively was stated unconstitutional. The judgment which I am talking about also stated that amending such transaction having retrospective effect was also unconstitutional. However, the revenue is very much firm that to bring such transaction under the tax ambit, under the GST levy, and hence they have challenged the order of Kerala High Court to the Supreme Court. Now there is a stay on that judgment as of now. I do not have any update, or there is no outcome from the apex court. The Supreme Court has not yet ruled out its decision. So we hope for the best, and let's see if the doctrine of mutuality still stays intact. Now, taxability of different charges. Now, as I said that as of now, there is no outcome from the Supreme Court. So let's analyze whether and how each of the transactions between a cooperative society and the members be taxed in the different category. Property tax. Now, the name itself says that it's a tax. Now, when you say that the property tax is the tax, which is a local body tax, it is collected by the society from each flat, and then it is deposited to the authority. Now, this is not in the nature of any service. As against the property tax paid, you do not get any services. Only the society is helping you in the collection of that amount commonly, and the fund which is accumulated is paid to the governing authority. But however, hence the tax will not be form part of the taxable charges. Next is water tax or water charges. Now, water tax and water charges are two different things. Water tax is what is again levied by the local body, whereas against water charges, which are charges which are recovered by the society. So, for example, for any event or in during times of shortage of water, the charges are recovered from each member so that the common water facilities are water tankers are called for, or some arrangement is done for water supply. Those charges are taken recovered from the members. Now, again, these services are provided by the society to the for the benefit of the members, and hence these are the charges which are levied in the maintenance invoice. Electricity charges. Electricity charges will also be of two types. For common areas like a society compound, the terrace area, the other lobby, and all other common areas which are for the common use of the members. And in some, I don't think presently any society must be having any individual electricity charges collected by the society. Each flat pays for its own electricity charges. There is a meter for each flat, and the common area are being are being paid separately. However, the collection, the each flat individual member bears the share of its electricity charges. Now, non-occupancy charges. These are very well-known. Non-occupancy charges are when the owner of the flat or the unit rents out the flat to some other person and is not using for its own purpose. That's when the non-occupancy charges are levied by the society or in the individual invoices of the maintenance. Maintenance and society charges. These usually includes the services, the charges, the reimbursement of share of contribution of charges for all the common services procured from the third person by the society. However, the recipient here will be the member of society. The society is only a middle person who is availing this or managing these charges, the collection of amount from the members, and thereafter procuring services from third person, or even if hired by the society from those person, and then availing it, making it available to the members of the society. Parking charges. So parking charges are in the nature of services like the areas which are available for parking, the maintenance of those parking areas, such charges, or even on extra paid basis. If the society is having extra space and the facility of parking the vehicles is available, is given to the members, society may recover some charges from each member on for maintenance of those area. Now, sinking fund or repair fund. Now, sinking fund is also a type of a fund wherein the amount is accumulated small portion from each member of the society. Thereafter, it is used for the development of the area, the common areas, the society as such, for the building and for the community halls, or nowadays not every societies might are having clubs, gyms, swimming pools. So for maintenance of all those areas, they might renovation of all those area, they might be collecting the funds. as the repair fund, the name suggests. So those charges are collected by the society. Transfer fees. Transfer fees are when a member of the society is selling the flat or the unit to the other person. The process of the trans now each cooperative societies, each member will be having shares in the society. So, hence it becomes the member of the society. So those shares are then transferred to the incoming member who is going to be the new owner of that unit or the premises. So the society charges a fee to facilitate through the process of share transfer. So that are the transfer fees. Now, use of common hall for personal events of the members. If the society is having a community hall or a space wherein any events can be conducted, the members are given the facility or the option to use such common premises or common hall for the personal events on a payment charge on the charges on chargeable basis. Then there are late payment charges. Late payment charges are every society issues an invoice. Some may be issuing monthly, some may be issuing quarterly. I think mostly everybody issues quarterly, and there is a due date. Up to that date, the maintenance charges are to be paid to the society. However, if the maintenance charges are not paid within that time, the charges, the late fee or some interest portion are levied on those delayed payment. So these are also, all these are the incoming, you can say incoming sources for a cooperative societies. According to me, all these charges are liable for GST payment. So while computing the limit, all these are to be considered in calculating the turnover or the limits for each society tax GST taxability. Now, what taxability of different charges of the clubs? What are the charges which a club levies on its members? There are one-time membership fees. There are annual maintenance charges. Now there are banquet hall. The banquet hall charges are to be paid as and when they are used. Sports facilities. They have library facilities. All these facilities are available on the payment of one-time membership fees. So they are generally lifetime membership fees. And there are annual maintenance charges. So once you pay lifetime membership fees, as against you're also liable to pay monthly, annually maintenance charges. As renewal, you can say. Restaurants facilities are there, swimming pool facilities are there. Then there are, just like so cooperative society, sometimes clubs also require some renovation, some maintenance, and some other changes required to be done under the club. So these funds are collected from the members itself. However, some clubs cater to non-members as well. Now, after looking to each of the services or the charges, the incoming part from on for cooperative societies and clubs, you can see that whatever payment is done by the members to the clubs or the societies are in turn coming to them only. They are for the benefits of the members only. So that's where this doctrine of mutuality comes, and every time it is challenged before the court that you cannot tax such transactions. It cannot have a flexibility between themselves. However, since the law has been amended in such a way, overriding all those judgments which are already passed, and also creating a deeming fiction that deeming provision that they are two different persons. At present, all GST is levied on all these charges. Herein, except for the tax part, because that property tax and water tax, we cannot say that tax will be levied on the tax on tax will be levied. So property tax and water tax are excluded. However, to determine the aggregate turnover or applicability of GST, we take into consideration all these services. And presently, the Cooperative societies, when the limits exceed, they do take registrations and they do levy GST on each of these services based on the exemption provided to them, which we will just see in the next slide. And all these services which I have enlisted here are also leviable to GST, and all the clubs are levying GST on each of their services provided to the members. And of course, services to non-members is definitely chargeable and GST is leviable, because the chargeability in clubs and cooperative society is in question because of the doctrine of mutuality. When you say that club is providing services to non-members, there does not exist any doctrine of mutuality, and hence services provided to non-members definitely are chargeable to GST. Now, exemption for housing society. Notification I have number I have stated for reference, notification 12/2017. It says that the services provides this exemption for services by an unincorporated body or a non-profit entity registered under any law for the time being in force to its members by way of reimbursement of charges or share of contribution. So here it is very important to note that definitely the clubs and the housing societies, especially this is for housing societies, the housing society is a non-profit entity. It does not work for any profit. They are into this for this arrangement for facilitating services or facilitating of the smooth functioning of the society and for the benefit of each member of the society. So they are covered under non-profit entity registered under any law for the time being in force. See, the society, as far as Maharashtra is concerned, we do have the Maharashtra Cooperative Societies Act, under which each of the society gets their registration to its own members by way of reimbursement of charges or share of contribution. So both things get covered here. Where the reimbursement of charges, see these water tax, water charges, electricity charges, all are in the nature of reimbursement of charges. They are going to be paid by someone, they are just acting as a middle person. Or share of contribution. Share of contribution means these sinking fund, repair fund, all these are share of contribution, wherein the amount is not fixed as of now, but for whatever expenses are going to be done for that repairs or renovations, each member is contributing their share. And also for clubs, share of contribution, you can say wherein they are paying membership fees, be it lifetime membership fees or annual maintenance fees. That part will get covered in this share of contribution. Up to, sorry, clubs will not be coming here. So sorry. Only we are talking only about the housing societies. Up to an amount of, sorry, I made a mistake here. It's 7,500. We need to change this. 7,500 will per month per member for sourcing of goods or services from a third person for the common use of its members in a housing society or a residential complex. So this exemption is available up to an amount of 7,500. I need to make a correction. So sorry for that. It is 7,500. Initially, it was 5,000. However, with effect from some January 2018, it has been amended and changed to 7,500. For sourcing of goods or services from third person for a common use of its members. Okay, so these first thing to note here is it's a member specific limit. So it is per member. If you are having say 2 flats in the society, but 2 maintenance bill you have, but you are still a one member. So that limit of 7,500 will be considered per member. Exclusions are non-taxable amounts of property tax and water tax. Variable applications. So here, as we know or we are aware of, that maintenance charges are generally recovered based on the number of units you own or based on the area which you occupy. Certain societies do have that format. I think most of other societies might be having that format, that the maintenance charges depend upon the square feet area of the units you occupy. So each flat may have variable amount. The maintenance charges will vary depending upon the number of units you own or depending upon the per square feet area you own. Now there was one triple AR which had this, and also one Greenwood Owners Association, Madras High Court, wherein there was a litigation that this exemption of 7,500, where while computing the taxes, if, for example, the maintenance charges total is 10,000 per member per month, the tax will be levied on 2,500, that is the amount exceeding 7,500, or on the 10,000, entire 10,000. Practically, all of the societies presently are levying taxes on the entire bill amount and not utilizing this portion of exemption of up to 7,500. However, there are supportings which gave this benefit of 7,500 and taxed only the additional 2,500. However, a practical approach is more suitable. This will hamper or affect the common person because GST credit is not passed on. It's a residential unit, and hence it becomes a burden when GST is being levied on the entire amount. So registration requirement, if you see the turnover, while calculating the turnover, the regular limit under section 22 of 20 lakh is applicable where the society is in the, you cannot say business, but in the activity of providing services, and hence the limit of 20 lakh will be applicable. For clubs, if the clubs are in the undertaking activities of supply of goods, I don't think there might be clubs who are only in the supply of goods to avail 40 lakhs limit. There is always a mixture or exclusive supply of services which are undertaken by clubs for its members, and the limit for both of them will be 20 lakhs. So hence the turnover, if the aggregate turnover exceeds 20 lakh, you will have to take the registration. Here, please note, even if the property tax and water tax are not included in the taxable amount for paying GST, while computing the limits, the aggregate turnover, these taxes, this amount of property tax and water tax levied will have to be taken into consideration because the definition of aggregate turnover includes the exempt supplies as well. So for if any financial year, the maintenance charges or the recoveries, whatever are done by the societies exceeds 20 lakh, society has to take a registration. Now here one more important point, even if here the exemption limit is 7,500. So even if each member is having a share, having a maintenance invoice per month less than 7,500, just that there are number of units, the number of units in the society is more, that the limit is crossing 20 lakh, the society will have to take the registration. Even if the per bill per member per month amount is less than 7,500, which is the limit mentioned over here. They may not pay any GST, but they will have to take the registration. And as and when this per month per member amount exceeds 7,500, they will have to pay GST on that amount, on the entire invoice. That is what is practically undertaken right now. Voluntary. Yes, a society can opt for voluntary registration even if it has not crossed the threshold limit. Composition, I think since the GST so far has treated societies also at par at the regular taxpayers, they may opt for composition scheme as well, which is under section 10. For goods, 150 lakhs, the turnover is restricted to 150 lakhs, which hardly would be coming into picture. But for services, it is restricted to 50 lakh. And the 6%, I think is the rate for the composition taxpayers. So the same will be applicable even to societies. Now, input tax credit. Certain things. So all the conditions which are specified under Section 16 will be required to be fulfilled for availing the ITC. Definitely, once you are treated as a regular taxpayer, you are paying the output taxes on your output supply. Your supply is treated, the cooperative societies, whatever activities are undertaken are treated as supplies. The consideration is also the charge, maintenance charges are termed as consideration, and you are supposed to pay GST. So you are even eligible for ITC. So all the conditions like you have to actually receive those services or receive the goods, or the you have to pay the amount to the supplier within 180 days, which is as per Rule 37. All the rules and regulations applicable to regular taxpayer for availing ITC will be applicable to societies as well. ITC under Section 17(5) needs to be checked, and ineligible ITC is to be determined. So whatever ITC, I can say it's like a negative list which we had in service tax. There is a negative list of eligible ITC in under Section 17(5) under GST. So all those ITC mentioned there, the inward supplies which are mentioned in that Section 17(5) will be applicable even to a cooperative societies. Rule 42 and 43. Proportionate reversal of ITC. Now, this becomes applicable to society as well. As I had mentioned in the earlier slide, that it is possible that cooperative societies each invoice is less than 7,500, and hence there is no taxability arising. But however, since there are too many number of units, the aggregate accumulation, the collection exceeds 20 lakh, and hence the society has taken registration. For some invoices, for some months, say a particular person has availed the common services of common community hall which they are having, or a banquet hall which the society is having. So for that month, or for non occupancy charges, for non the parking charges, for any such charges, the amount is exceeding 7,500. So few flats for amount is exceeding 7,500. For few flats the amount is below 7,500. So these are getting covered under exempt supplies, and the others are coming under taxable supplies. And that's where the role of 42 and 43 comes into picture. So apart from outward supply, determining the limit of 7,500, even this rule 42-43 plays a very important role under in GST compliance for cooperative societies. For clubs, I think all the services are getting taxed. There is no such exemption or some criteria of having exempt or taxable supply. So for clubs, this rule 42-43 may not play a role, but for cooperative societies, definitely this is a very important rule which should be adhered to. Rule 37, we all know that the suppliers are supposed to be paid within 180 days for availing ITC. You have to check whether the suppliers have filed their returns or not. The society is supposed to even do that. Inputs, wherever the society has availed some goods for providing some services to the members, they can claim ITC on those inputs. Input services like audit services, if there are the society is getting its books of accounts audited, accounted, getting the compliance done, so all the professional services they are availing, all those services will get ITC will be available on those services to the cooperative society. Capital goods, for example, if it is having gym, it will have all the equipments. If they are having some office wherein all the data of society is being maintained, they are having a computer for office. So that is a capital goods, and the ITC will be available on the capital goods as well. Now, I have given a gist of references as amended from time to time. the act which we are supposed to refer for all these things, you may go through that. The rate notification is as applicable as it is applicable to other taxpayers, which I have noted here. The exemption notification, which is to be referred. The circular, wherein some clarification was given for the services, which category of services are to be taxed, which category services will not be included under taxable limits. There were FAQs which were released for cooperative societies on 2017. The same will have to be taken care while determining the taxability. And so that's on about cooperative societies and clubs. However, I want to just discuss these again about the roadmap here. The section seven, when section 17 had this point of between 2017 to 2019. After 2019, when this section 1D was omitted, I'm sure right now everybody is levying taxes after 2022. But all the cases, all the situations had present earlier, right from 2017 to 2022, must be under litigation or under you can say confusion whether it has been gone right or not. I hope the Kerala High Court judgment, the Supreme Court upheld the Kerala High Court judgment where the doctrine of mutuality was stayed intact, and we get some relief out of that. So what was the gap here? There was the deeming fiction was created by section 7. However, if you see schedule 2, the purpose of schedule 2 was only to determine that which activities are to be considered as supply of goods and which activities are to be considered as supply of services. So can you say that merely by including any activity in those schedule determine the taxability of that activity? See, for treating any activity to be a supply or to tax the activity under GST, according to me, these three parameters are to be considered, and the taxation should be determined. However, for in these case, when the activity of clubs or cooperative society was included as in schedule 2, it did not have any backing to determine that activity to be a supply per se, and hence merely inclusion of that was entry number 7, which was there in schedule 2, which stated that the this activity is to be considered as supply of goods, which however was realized in 2022, and that's when they added the subclause. This subclause is clause double A, to create a deeming fiction that the members and the cooperative societies are two different person. And also they added an explanation that this deeming fiction will override all the judgments passed earlier by any court or tribunal or authority. So this entry number 7 was it's more professionally termed as a toothless tiger, where it was there but it was harmless. It did not affect the taxability. The doctrine, it does not affect the doctrine of mutuality, and these activities were not to be taxed. But still, after 2022, they came with these amendments to override all those judgments, and they even omitted this serial number 7, which gave the bifurcation of supply of goods. The entry or the activities of clubs were included in that serial number 7. So yes, I conclude my research on GST on cooperative societies and clubs. The key to success is to focus on goals and not obstacles. There are many obstacles which we have seen department coming up with more and more amendments, but still we should fight for the doctrine of mutuality, I feel. So thank you for participating in the discussion.
Thank you so much, Nidhi ma'am, for your valuable knowledge and sharing. Grateful for like teachers like you. Thank you so much, ma'am, for the wonderful session.
I would like to ask if anyone is having any query or any particular doubt or something.
No, just participant is asking for PPT.
Okay, okay. Sure, I'll share with them.
Thank you so much, ma'am. Now I further invite CA Komal ma'am for to take charge for the next session. Thank you so much.
Thank you, Himani. Greetings to all. I am CA Komal Patel, and I am pleased to introduce our today's second speaker, CA Devi P. CA Devi P is a partner in a leading CA firm and has over a decade of experience in audit, advisory, and consulting across multiple sectors. She has handled major audit assignments and consulting assignments across India and international regions and actively contributes to mentoring and professional development within her firm. I would like to now call upon Ms. Devi to start on with her session. Thank you, ma'am.
Thank you for that introduction, ma'am. Just sharing screen. My screen is visible. Is it visible, ma'am? My screen?
Yeah, it is visible, but your voice is. Yeah.
And I'm audible also.
No, the voice is little low.
What about now, ma'am? Am I audible better?
Yeah, a little better, ma'am.
Okay, because I'm able to hear you clearly. Everybody else has the same feedback, is it? Not able to hear me? What about tech support? You're able to hear me? So I'll go ahead, right? Yeah, I'll go ahead. Okay. All right. Good afternoon, everyone. And thank you, CA Komal Patel, for doing the introduction. My sincere thanks to ICI and the Women and Young Member Empowerment Committee for inviting me to speak with all of you today. It's an honor and a responsibility to be amongst fellow chartered accountants and colleagues who, like me, hold the trust of a lot of businesses, the regulators, and the nation's uh, responsibility, so to speak. I have been told today to take a non-technical session, and while the entire world and India is talking about AI and its impact on the business world, I thought why not explore the realm of what it is meaning to be a chartered accountant in the transforming business world today. And when I say transforming business world, it means not just the impact of AI, but the impact of geopolitical volatility. The shifts in the kind of businesses that went from traditional manufacturing businesses to linear networked businesses which have no tangible assets per se. Thank you so much for this opportunity. In fact, while I was doing my research, I did get a lot of eye-opening points for this presentation, which I hope to pass on to all of you. So I'm here today to tell you not what you already know about compliance or accounting standards. We all know that well, and we're trying to learn by the day. But here I am talking about something that we need to confront together, that the future that's already arriving. The gap between the CA the world needed when we qualified versus the CA that the world needs now from us today, and why closing that gap is not optional anymore. So let's begin. And like I said, uh, the reason that I chose this is because we are standing at an inflection point. And what we do over the course of the next 5 years or the next decade is going to shape the next century of the profession in India. While I didn't mean to get alarmed with this myself, I saw a lot of articles in today's Economic Times resonating the exact same thing that I was going to say. So I felt very reassured that what I am conveying to you through my thoughts is what also the industry leaders are echoing. So, although I don't mean to alarm you, what I mean to say is that the automation wave isn't coming, it's already here. And what work required entire teams to do now requires automation and just one person reviewing it. The business world, on the other side, has become extremely complex. So you have clients dealing with cross border tariffs, and suddenly one night the tariffs are taken away. There are free trade agreements announced with geographies that we've not anticipated before. And because of all of this, there are supply chain disruptions. There are also a whole host of local laws coming in that shake up businesses and their existence. So, technically, we're operating in a world that we are not trained for. And like there's a recent news article which said that a large firm actually asked its auditor, another CA firm, for savings because of using AI in their fees. Clients will start asking a question that we don't want to hear. Why do I still need you? Not because they don't value us chartered accountants, because they're realizing that the CA who only does what a software can do is not worth the premium anymore. And here's the thing, I told you we're at an inflection point where AI automation is taking over. We don't tend to see them while they're happening. One day you will wake up and realize that the world has changed. Can any of us even go back to writing our own emails without having validation from ChatGPT? Or conveying our emotions or drafting a LinkedIn post without having ChatGPT run past it? No, we can't. So, in that sense, our world has changed and our world has evolved. But depending on what you did during this inflection point and during this change, you will want to know whether this awakening for you is a pleasant surprise or is it a devastating shock. The choice that you make on whether you want it to be a surprise or a shock is what you should do right now, not 5 years from now or not when AI gets better. It's right now. In the work that you're choosing to do today, in the skills that you're choosing to build today, and in the way you're choosing to serve your clients today. The question is, when AI handles or is going to handle everything that I was trained to do, what makes me relevant and what makes me indispensable is the question. And that's what's here. That's what we're here to discuss today from my perspective. Again, let me put out the standard disclaimer that this is, in my opinion, and is in no way the opinion of anybody else. And I will be taking you through this PPT in a very non-conventional way, and any resemblance to any firm or any person is purely coincidental through my PPT. So my next slide, it says, sometime in the near future. Although my PPT begins saying that sometime in the near future, we're still talking about that future which is almost here. And for a few firms, they can so relate to what I'm going to say next. Let me walk you through one day in the life of us chartered accountants. So we have 7:30 a.m. before you reach office. You open your phone and your AI coworker has already done this overnight. Reconciled 14,000 bank entries across 3 entities, flagged 23 GST mismatches for review, generated a draft MIS for the management meeting at 10 a.m., and auto-filed TDS returns for the month. And it ran while you slept. But this morning, something else also happened. Rupee crossed 100 against the dollar. Your client who imports raw materials just lost 6% margins overnight. He's panicking. Red Sea freight rates spiked again. A Tirupur exporter's EU shipment cost just doubled. Delivery delayed by 3 weeks. The co-worker that handled the tasks, but the world just created problems that no machine can solve. Let's go one step further. Let's say that AI flagged both of these issues to you, both the rupee against the dollar and the Red Sea freight rates. But it also calculated a margin impact, for example. But can it tell you whether this is just a temporary phenomenon or a permanent one? Can it tell you whether to lock in forward contracts now or to wait? Can it tell you if this is the moment to renegotiate with your supplier or to absorb that cost yourself? No. That is business intelligence. Not just seeing the numbers, not just flagging the problems, but to understand the ripple effects. Knowing what to question next and knowing which thread to pull. So, this requires judgment, and that judgment comes only from us chartered accountants. And that's where your day actually begins. Now, having seen this, let's move on to the next part of your day, which is, let's say, at 9 a.m. While I do understand that the target that we are looking at is both audiences of chartered accountants who are in practice as well as in industry, I've created two scenarios. First scenario, let's imagine that you're done sipping your coffee and you're going to sit down to have your breakfast at 9 a.m. A promoter who's a client calls you. He says, hey, my finance manager has already used AI to draft a tax structure. He doesn't need you to create the structure. He needs you to tell him whether it will survive scrutiny. That's the shift. From the creator of information to the validator of judgment. So here again, we are saying that you as chartered accountants would play a key role, or us as chartered accountants would play a key role in validating the judgment that any automated tool would throw up to us. Let's say you're in an industry. Your CEO calls you. She's seen the auto-generated MIS that your AI tool ran for you. Revenue is up by 18% and she's extremely elated that she wants to expand into a new state, a new country. The numbers say yes, but you know that the way the business operates, the working capital cycle won't support this new business expansion for 6 months. What do you tell your CEO? Do you say that, oh, we're elated that we've made 18% profits higher than last year? Or is it the time to explain why not yet is the right answer? So yes, while automated tools can give you data, the judgment still lies with you. And that's a very, very valuable judgment that you can give someone. After having a tough morning, you go into work. And at about 11:30, while you were reviewing the GST matches that were thrown by your AI coworker this morning, you reviewed them and you looked at it and said, yeah, 20 were timing differences, 2 were data errors. Yeah, I can have them corrected. But one had an issue. Let's say a 12 lakh invoice from a vendor. You have the physical invoice in front of you. You've made the payment, but the GSTR2B shows nothing. The supplier hasn't filed their GSTR1. Now here's where the software stops and you start. The software found the mismatch. But here's what you know that it doesn't know. Is this vendor reliable? Do they have a history of non-compliance? Is this a one-time delay or are they in financial trouble? If you should claim this ITC and they never file, will the department come after you? Should you call the vendor, hold the payment, or reverse the ITC? Machines or automations find problems, but we understand them. Let's move on to midday. Well, you have a hard conversation. A, a client wants you to evaluate and sign off on a revenue recognition policy change. Everyone does it and the standard permits it, he says. I'm sure a lot of you have heard this before. The software approved the computation, the numbers work, technically it's compliant. But only you know that this doesn't reflect the true essence of the business or the underlying characteristics of the business. This is the moment you need to use judgment. No software will handle this call for you. Similar is the case of someone in industry. I'm sure this is a familiar situation for those in industry. The board wants aggressive revenue recognition to hit the quarterly target. The CFO of the peer company did it, their auditors didn't object, they say. Your system says it's within the standard, but you know the substance doesn't support it, and your name goes on that filing. This is the moment. No dashboard makes this decision for you. Here's what I want you to take away from this slide. This is why our profession exists. Not for reconciliations, no tax calculations, and not for the compliance filings. We exist for this moment when someone needs a professional who will hold their line and stick to their stance. Ethics, accountability, this is what we go by. You have to have the courage to say, no, this doesn't reflect the substance, even when the client doesn't want to hear it. Or you should say that, yes, I'm lending my name to this decision. So it should stand the test of time, not today, but maybe 2 years from now when the regulator will ask questions, or 5 years from now when the business actually unravels what we've estimated. Technology will automate compliance, can automate reports, it can flag anomalies, but it cannot carry accountability. It cannot exercise ethical judgment. That is the job only us chartered accountants can do. And when we lose sight of that, we start thinking our value is in the technical work, in calculations, in filings. And that's when we will become replaceable by AI. Our signatures mean something because we're willing to withhold it. Our advice matters because we're willing to say no. So that is the core of what makes us chartered accountants. Over to the next slide. 4 p.m. I know I have labeled this as the wake-up call, but this is true awakening in that sense. What happens when you lose a client and why? Because a growing MSME switches to a platform which is automated. It can handle compliance, it can handle filing, it can handle basic advisory, and all for a quarterly fee less than what you charge for a single month. In industry, your company's new CEO is asking you as the head of the finance team, why we have 40 people when the competitor can run on just 12 people with faster reporting, with better insights. Finally, I'm here to say that while technology and AI is a mandatory skill, it's not at all a privilege anymore. You can't say that I will do compliance and someone will do AI. No, we have to be in it. We have to do what AI is doing or help ourselves with AI. End of the day, what does this tell us? Everything that was routine got automated, but everything that required you as a chartered accountant required judgment about a business world that's changing fast. And I'm here to tell you about maybe 5 skills or 5 capabilities that we as chartered accountants need to have in this fast moving, transforming world. The first is business intelligence. This is not about reading financial statements better. I know we're all one better than another at reading a balance sheet, at making ratios, at making variances. That's verification, yes. That's what we were trained to do. But the world has changed. What was tangible businesses, linear businesses, are now intangible and completely networked. 10 years ago, or maybe even 5 years ago, you audited a manufacturing company by walking the floor. You could see their inventory pile up, you could see their machines. You actually physically verified the goods. But today, your client is a D2C brand. It has about 100 crores in revenue, but doesn't own a single factory. Or maybe it's a SaaS company with a 100 crore valuation, but has no tangible assets. Maybe it's a logistic platform, but doesn't own any vehicles, but they handle 50,000 packages a day. Where is the value? It's in the brand, it's in the network, it's in customer relationships, it's in software. It's all intangible. Again, let's look at an example. Let's say a client comes up and says, my revenue is up 40%. My margins look healthy. My EBITDA is positive. But what do you see? 60% revenue is concentrated from one customer. Customer acquisition cost has tripled. Repeat customers have decreased. And my growth is funded entirely by discounting. The balance sheet says that they're growing. But what is the business reality? Unsustainable. That is business intelligence. And we must aim to go beyond what is obvious. From my experience, 3 takeaways on business intelligence. One is, let's read beyond the financials. Let's go into industry reports. Let's go competitor filings. Let's understand what's happening in the client's sectors. Second, let's understand risk differently. Platform businesses have concentration risk. Brand businesses have reputational risk. Subscription businesses have churn risk. See these before they actually hit the P&L. Third is to become a translator. And this is where we as chartered accountants play a very, very pivotal role. We need to balance between what the promoter wants, the banker needs, and the regulator requires. I would suggest pick one client or an industry and understand how this business actually creates value. Is it how it records revenue? No. Understand how it makes money. Because in a world where routine is automated, understanding business is the baseline. The CAs who shift from just verifiers of numbers to interpreters of value are the ones that remain indispensable. The second capability that I want to talk about today is risk judgment. And this is where most of us get stuck because we've been trained to flag everything. Every variance, every anomaly, every deviation from the standard. But in a world where AI flags 10,000 anomalies a month, your job isn't to find more problems. Your job is to find out which problems actually matter. AI, let's give it to them, is better at finding problems than you. It will catch every minute mismatch, every variance, every outlier, faster and more accurately than any of us can ever do. But the differentiation is it doesn't know which matter and what are the problems that matter and what are the problems don't. Risk judgment, like I said, is knowing which ones hit the P&L and which ones hit your reputation. Because not all risks are equal. So start prioritizing. So when you review your next audit file, an MIS, a compliance report, ask yourself, if this goes wrong, what happens next? If the answer is a little extra work next month, deprioritize it. But if the answer is a notice, a penalty, a client relationship, that is where your time has to go. It's about being more strategic and about what you're more careful about. The third ability or capability that we as chartered accountants need to build in this transforming business world is strategic partnership. Most of us are still showing up as reporters, not advisors. I know there are few who are advisors, but here is for those who are just reporters. We generate MIS, we send variance analysis, and we file returns. And then we wait for a question to be asked. That, my friends, is not partnership, it's a service. Here's what strategic partnership actually would look like. You are in the room when the decision is being made, not after decision is being made and when they need the accounting treatment figured out, not when they need that structure documented, during when the decision is being made and when they are still deciding. We should be strategic partners to the CEO, to the management, to our clients to decide whether to expand into a geography or to pivot domestic. These are not accounting questions, but our role grows into a larger business questions. And if you're not part of this conversation in business rooms, then you will be treated as a compliance function and not a strategic partner. What can you do, you ask? So my solution is simple. If you're in practice, the next time you send the clients their financials, don't just send numbers. Give them insights, saying, I know revenue is up here, but I see a concentration risk. Hey, have you explored getting a tax exemption under that section? Margins have improved, but I'm worried about this clause in your vendor contracts. If you're in industry, the next time this is a strategic discussion, be in the room, be prepared, take notes, and don't come for accounting treatments later. Because strategic partnership isn't about knowing more accounting. It's about understanding the business well enough to have an opinion that matters. The fourth capability that I want and to present to all of you, and is the one that the profession has emphasized, is ethical courage and accountability. I know we talk about the code of ethics, and we are accountable to the regulators, to the institute in various forms, and accountable even to the larger stakeholders. Earlier, we used to be accountable to shareholders, but now the stakeholders are at large. The stakeholders are everywhere in the world. So we as chartered accountants have to have the courage to be ethical and accountable. Because this is the hardest capability, because it's the one that can cost you clients. It's the one that can cost you fees. And it's the one that makes a client and auditor relationship uncomfortable. But also it's the one that matters when things go wrong. We live in a world where technically compliant is very easy to achieve. There's software that will optimize any structure, AI that will draft any accounting treatment, and clients know this. In fact, they themselves can get this. Why would they come to you? They're coming to you because they need validation. They need validation to tell them what is right and what the regulators are expecting. Ethical courage is what happens in my previous example at 2 p.m. when a client asks you to sign off something which they say is standard compliant, but you feel that that isn't right. So this is the part of the job that technology will never touch. AI doesn't have a reputation to protect. AI doesn't have a professional license that can be suspended. AI doesn't wake up at 3 in the morning, wonder if what you signed off on is going to blow up in 2 years. You do. And when something goes wrong, the software company won't be there in your defense. You will. That is why ethical courage, my friends, is not optional. So here's my takeaway. Your signature means something because you're willing to withhold it. Your advice matters because you're willing to say no. Your clients trust you because they know you won't just tell them what's possible, you'll tell them what's right. And that is the core of what makes us chartered accountants and relevant chartered accountants in today's world. Last, but by no means the least, AI and technology. Not just using of AI or software is a key, but knowing when AI can augment a judgment and when it cannot replace it is the key of what I want to tell you today. The moment AI tells you something is compliant and you sign it without applying your own judgment, that is when you became replaceable. AI fluency is knowing the difference. It is knowing when to use the tool to go 10x faster and when to ignore the tool because the answer doesn't pass the test. Think about the day that we just walked through. We used at 7:30 a.m. we reconciled 14. AI reconciled 14,000 bank entries. Use it. That's augmentation. At 9 a.m., it drafted a tax structure. Use it as a starting point, but apply judgment to know if it's right. At 11:30, AI flagged 23 GST mismatches. Use it to find the problems and decide which ones matter. At 2 p.m., when the client wanted you to sign off on something that technically worked but fundamentally didn't feel right, that's not a place for AI, that's a place for judgment. And if you let AI take that call for you, if you says, oh, it tells me it's fine, so I'll approve it, that's the moment you stop being professional and you become a processor. I always say, a CA with AI fluency will outlast a CA with better credentials. Knowing the difference is the skill that matters. Knowing where to apply judgment and where not is what is going to be the key. And let me reiterate, AI is a tool that makes us faster, but it is not a substitute for thinking. With this, I would reiterate what our institute has been saying, and what should not change is independence, integrity, professional discipline, and responsibility to the society and the nation, so to speak. Technology can automate your work. The world can reshape your client's business, but it cannot automate your character, judgment, and your ethics. 5 years from now, I know that will your clients still need you? You need to ask yourself whether your company will still need you. The world won't wait for you to catch up in this transforming business environment. So start today. Thank you.
Thank you, Devi ma'am. Am I audible?
Yes.
Thank you, Devi ma'am. It was a wonderful session. And I'm just waiting for any questions over here. Can we just wait for another 2 minutes for the questions?
Sure, no problem.
So, ma'am, there are no questions as such. But I would personally like to say that it was a very enriching session, very well articulated, very well drafted from you. And I would like to give my vote of thanks on behalf of the entire group, which is creating this, which is working towards Yashashvi, these webinars, as well as the audience which is there, which is learning from all these valuable inputs given by you. So thank you, ma'am. It was a wonderful session.